Good afternoon, everyone. This is Rose with Brooks Price Action Team. I'm going to do an end of day review for November 12th. Okay, so today's Tuesday, and yesterday's market went sideways in a smaller trading range, and I'm not going to go through this session's overview, but you can see that we have opened with bar one is within the range of yesterday. Okay, so here's the yesterday's high and yesterday's low is yesterday's close with bar 81 and today's open. So we've opened here, but there is a bear flag in the market. It's seen 1, 2, 3 wedge is bear wedge top here, and bear flag. So I'm looking for basically here is the wedge, and the bears are breaking this wedge, so I am selling here. Now with the bar one we were that was a doji, and we had a bar two, but it's got an upper wick pretty strong, and I had a sell zone right here, so I did not want to buy into this zone, and I pretty much did nothing there. However, actually I did buy there, but I ended up taking profit, and my profit was around right here, but I didn't do after that much as soon as I taken the profit. So this is the Globex range, and Globex bears try to close above the Asia session. We thought maybe we would get there, but we failed, and then we started to coming down, and then we had 1R, 2R, and even, let me see, 3R targets for Asia reached before we actually reversed back up. But I'm going to talk about that when we get there. So once we got that initial breakouts, we could not get any follow through. This was 60, 35, 50 was my target. And I said to everyone, time to take profit and not expect a follow through, because we do have a wedge top here. And most likely we might form a head and shoulders pattern. Bears are looking to sell. Here's the first sell, and here's the second sell. No follow through after bar two. Bulls are exiting, and the bears are start to sell. They're selling with the limit order. 2 bear bars, 4. They might be selling above 4, but nothing activated there. They try to probably sell above bar 5. Bar 6 went 1 tick above bar 5, but not everyone entered. So it's very difficult there. And bulls see a market double bottom 4 and 6 bull flag, but it's difficult to buy above a bad bull bar 6. So then you get the bar 7, which is pretty much bulls giving up there, and we're breaking below this wedge or the bear channel. So it's time to sell. You can sell with a stop order, but my preference selling this bar 7 was a pullback to its midpoint and selling with the limit order. So in the trade room, I told everyone anybody who's stuck here probably going to buy. The close are underneath this bar because it is support here, and then try to break even. So if you are a bull, maybe bought there, and then bought again. We try to come to the break even, but look, we did not actually test it. So that right there is give up, and the bears will give up there, and I'm sorry, bulls will give up there, and the bears will start to sell. So I'm seeing a breakout test area and strong bear bar and pullback. So I'm thinking I can sell here. Here's another leg. A bar like this should get a leg or 2 at the very minimum. Bar 10 is nice, but we're not getting a good follow through. Every time we get a bear bar, we're getting a bull bar. So we're going sideways, but we're kind of pointing down. So there's a bear flag here, double top at the moving average. So the first entry, second entry short underneath 14. I'm selling some more. So you can also say look, I can sell here, put my stop there, but that's not how I measured. I had a double top there. I was looking for bears to take out the neckline, which is bar 13 low with a bear body. Now they did it. You can measure from there, and that would be your 1R and that would be your 2R. but I generally measure like this, where the breakout is bar close, and that was my 1R, and then that was my 2R, and that was my 3R. And you can see we came to the 3R, but we couldn't able to close below that. As the market is coming down, I'm seeing small micro channels with only 2 bars. Bears are making first leg, second leg, even third leg. Bulls are trying to 1, 2, but they're not able to get to the moving average. The gap to the moving average is open, and we're getting another double top here, so 18 and 22. So here's the neckline, and the bears taking out that neckline is with bar 20, let me see, bar 23. But problem with that is it's not really taking out the neckline, but you can still measure. You put your stop there, so that your 1R, that's your 2R, and then 3R and 4R, you can still continue to sell, so targets are pretty much the same. And then here is another double top right there. I did not buy these bar 29 is because there were bulls stuck here with 22. They bought above it. If you're a bull and you bought above 22 or the close of 22 is if you buy, okay, if you buy there, okay, maybe buying the close of that bar, all it's going to give you is basically a average break even. Look, market came down, right? Opened here, went all the way up, gave you a break even, and then came back down. So would you buy here? No, it closed here, so it would come down. But if you do buy somewhere, say underneath this bar or the close of this bar right here, 27, okay, you still will get your break even. Average break even is right there. This is where these bulls are actually start to make money, but they couldn't get their actual break even. But still, it works just fine, even though market came down first before going back up. So you should not be buying anything underneath the moving average at all. This is a tight bear channel. It wants to come down, but eventually it's going to go into a trading range. So we are coming down. So instead of buying, I wanted to sell because there's a double top here and the neckline 28. I'm looking for a bear body taking out that, and that's right there. So I put my stop there. I'm going for a measured move target right there. We could not get the 2R. So this is my 1R. I'll take it, but or you can say you missed it. There's another double top here, and bears took out that, so I will take that. That's my 1R, 2R, and 3R. So bears done a terrific job here. It kept pushing and pushing. I had a lot of targets. I had zone here that would breach. I had a measured move target. I can measure. I didn't get that one, but let's see. Right there. So I went for this, and I got that. What else? I had a gap target. Let's see. So the market first measured. I measured this one, and we came down, and then we had a 2R. But I had a gap which was right around here. That was nice, but it kept pushing. So I'm thinking there's got to be another one right there, and this is how I believe I got this, and this was my targets. We went below it, briefly overshooting, but eventually we reversed back up. So it's a really good job. You should have measured this structure breaking down. That would have been your actual measured move target. So I have a bear trend line right here, and the market is not breaking, is above this up until here, is right there. Bulls are pretty much locked, and they're looking for another leg, very climactic move up. It's a reversal, V-shaped reversal. It's a sharp reversal, I should say. So we'll probably going to on a higher time frame, bears probably see a strong bear bar, and they want to correct it. So we thought maybe we could just get back up to these breakout test areas and then maybe go sideways, but nope, bulls had a different idea. They wanted to correct this, so it's a sharp recovery. Now we had a huge bar. It kind of vacuumed down, and you can see where it vacuumed down. This right here is support here. and market is showing a really strong bear bar. It's the biggest bar in this trend, so therefore probably exhaustion. This bar is probably owned by the bulls. So what does that mean? Institutions invest in bear bars. Bull institutions, bullish institutions, institutions that they want to buy. They actually invest in bars like this and make the market look very bearish, only to trap other institutions, because the market has been selling down and down. We moved underneath the low of yesterday, and we actually took this range and projected down, but that's about it. A bar like this will trap you. It's not getting any follow through. We now have a 3-bar reversal, 42, 43, 44. Market wants to reverse back up. We have a couple of inside bars. I think we have become always in long there, and market is now reversing. I'm expecting price to get above the moving average. So right here is I started to measure some targets. That was my measured move. Then I said, okay, we have a new bar, 46. I'm going to take the whole thing. First, I measured from that. That was my 1R. That was my 2R. Then I've taken the entire leg and I projected up, and you can see some profit taken, but then bulls close another bar there. So I could definitely take that gap right there, and I'm measuring the gap at this point. So you can see, or you can measure from here, which you only get that, but if you measure the gap, then you're going to get a much better measured move targets before market goes actually sideways. In the meantime, I'm seeing a leg 1 here pull back, leg 2 pull back, and a final leg 3 divided into 3 small legs. So you got an embedded wedge here, and the market is getting ready to reverse. It's probably going to come down. Think of this as a spike. It's going to come down to the pullback portion, which is 56 or 57 lows. And it did. It came down with several legs. It went sideways first, 1, 2, 3. Micro double top is first leg, is pull back is second leg. This is a really good bar, is selling, bar 69. So if I'm going to sell anything, I'm looking for a good bar. I can put my stop there, and that would be my measured move target, or I'm going for a 2R somewhere around here, but we ran out of time. Bar 77, 78, these are institutional. But plus is you can also measure just the trading range, and you would get the 1R and 2R right there. That would be a lot safer, because you're basically measuring this trading range projecting down rather than taking this bear bar. So even if you're selling, doesn't matter. Even if they were selling strong, you got to look left, right? You need some support. So look at this right here. This bar 50 and 51 that's a momentum continuation and a breakout. So here's the breakout. So right before the breakout, this area, I would take the entire area like this. This would be basically my support. So if I'm selling into it with several legs, maybe leg 1, pull back, leg 2, pull back, leg 3, I need to start to take profit. That's a micro double bottom with 77, 78, and there's profit taking began. This is a buy zone, and then we bounce and go back to the moving average. So all in all, we became always in short with bar 7. We have a double top bear flag second entry short at the moving average. We have a nice bear breakout bar. That's great. Bulls got a double bottom here, and they will try to reverse, and that's why they got stuck here above the bar 13. They most likely bought it hoping that they're going to get back above the moving average, maybe get back to the open of the day, which is the bar 1 open. But the bears with the bar 15 took out the low, that double bottom. So what you do is you look for exploitation, and that's the breakout, and that's my target right there. I can also go for a 2R. Anything more than that is just basically you're trailing your stop, but my first target would be that. And then we continue to come down more. Here is another, there's no double bottom here, but there's a double top. I can also measure from there, and I put my stop entry there and stop there. That will be my measured move target. That will be my 2R, 3R, and 4R. So and so. Here is a double bottom. Bulls are still buying above bar 31, and they're stuck once again. Not a good idea buying underneath the moving average. You got so many bars underneath the moving average, and we have a tight bear channel. is they're selling everything. So you see a double bottom 28.31 or 31.33. So bears are closing a bear bar, right? So starting, I will put my stop there. Exploitation is beginning around, I will take the 35, and this is going to be my target. So that's my stop above, because bulls who bought, so I'm going against their stop and a breakout bar, and I'm going to let this come down, and this is going to be my target. So for the bulls is you can there are no double bottoms, double tops, but there's a tight bull channel here is right the first break of the trend line. Bulls will either buy the close of that bar 47 or one tick above. So if you are buying, right? So if you're buying right there, where are you going to put your stop? Now, if you put your stop underneath bar 47, that's your 1R, that's your 2R, that's your 3R. We also made it to the 4R. Wait a minute, 1, 2, 3, 4, 5. 1, 2, 3, 4. So that was the 4R. It's a beautiful swing target right there. So swings are generally 4 or 5 times the regular scalp. If a regular scalp is only 5 points, there's 5 points in there. The body close here, so that you can see there's a 5 point there buying. Above one tick above, that would give you that 5 point scalp, body to body, right? And if you quadruple that, that's basically your swing. And we got that. That's what the 4R is for. Or if you put your stop is a white stop somewhere down here, right? And you want to be safe and you bought there. I think it's unnecessary to have a stop that far. But you can also have a money stop, which is like a 5 point. That would be your 2R. Or if you put your stop here, then you're definitely going for this, but that's about it. And another one, maybe you would buy also right there. That's a pullback. Then you would put your stop here. You would go for that. Or if you put your stop there, you would go for that. Either way. But when I'm seeing a tight channel and a pullback and I want to buy it, maybe the pullback is bar 50. And I put my stop there, I'm going for 1-to-1. Right there, it's big enough that I can take profit. And what else? Here's a strong move up, pull back right there. And if I'm entering late in the trend, I want to buy, right? Here's a pullback, first entry long, pullback, second entry long. I'll measure from there, put my stop here, that's 1R, that's 2R. If I want to put my stop down here, unfortunately, I couldn't get there. So this is why I don't like to use white stops all that much, especially late in the game. So I'm going to use the pullback bars low because I'm buying somewhere above that and I want to keep the risk small, and that's where I'm going. So all in all, this is a stop order market here. Stop order market started with bar 7. Just trying to remove that. And then here we have reached a bear gap, but problem here. So this is all these gap area. And as we reached it, here's the first sell, second sell, and a stronger sell. Goes sideways. There's a left head and shoulder pattern, left shoulder, 59.60 is head. And then the right shoulder, once we can't get above and close a bull bar above the left shoulder, this is definitely validated. So the bears will probably go into sell. Here's my neckline. Bar 69 breaks that is from the close. I can put my stop there. I'm going for this target. Now, can I get that target? I don't know. It's just you're you're selling into support here. 52 is the support, or is this whole area like I showed you. So most likely we're not gonna get that. But if you are smart, then use only the breakout of this small trading range. Then you can definitely go for a 2R target. Anyway, so big down is climactic, but it's not really climactic. It's just a bear channel. But it ended up getting trapping every bear. Is still trying to sell, and the profit taking started pretty fast. Once you see something like this, you're pretty much done. This is where the bulls are locking in because they want another leg or two up. So is you can buy into the major resistance, and then if you start to see dojis at the top of the trend, here is 62 and 63, even 64 is you're pretty much done there. This screaming that it wants to reverse back down, so look for some kind of a reversal pattern. Is market went up to the Globex high, came back down, broke the Globex, and here is a measured move targets is right there, is or Asia breakout, and then US session broke out. So here's the 1R, 2R, and 3R, or the measured move. Either or, it worked just fine. For let's see, for the hourly chart is we had right here the first bar was bear bar closing on its low. I told everybody it's an outside down bar. Most likely they will sell the close of that hour, and we're gonna test its low, and we're gonna keep selling. Is bar 2, the second hour is also bear close, so we're gonna keep selling because they're selling the close, and my target is the moving average, which is this 20 bar moving average on the hourly chart. We moved. I told everybody don't buy anything without a good signal bar. We're probably going to move underneath the moving average. And you do have a double top here and a neckline right there, right? So I put my stop there, neckline broken, and that is a measured move. You can also take that. That is right there is a measured move target, give or take. Now is market finally starts to take profit. Very strong, is lower wick, but it's not a good buy signal bar. We go up with bar 5, but you're basically buying within the range of this very tight bear channel. That's the first break, and it's a very strong break. Okay, is now bulls probably want to buy, but this is not a good buy signal bar 4. So most likely they're bears stuck there, and they're gonna sell within the trading range. This is a trading range bar 5, and expect for it to come down here, and it's exactly what it did. So market just came down and tested these bad signal bar 4, fourth hour high, and then bounced and closed closer to the last hour's close. So you can see it's pretty much a trading range close, and we're back in the Globex session at the close, and this right here, this channel, ended up creating a huge trading range. So tomorrow is we have a strong bullish move, bullish leg up, and again the break of this channel, first break. Probably buyers are waiting to fade this. We might go back and test this day's high. We might go and test these last week's high, last week's range high, this gold line. We'll see how this goes, but we could also let's see, there's some gap here. We could start to go up, make a double top, and I'm going to extend this up right here. We could go up right there and make a double top, and then start to swing from there too. So because we're in a trading range, we might actually get a couple of legs down, and then we could close this gap right here. Or at the very least we are going to come down and test this area. First we would go up, then we would come back down here. Maybe we can bounce from right there, from this area, but we'll see. I'll leave this is on the chart for tomorrow. Make that green, and then this is red. This I'm no longer interested in. All right, so we'll see how this goes. I will make everything ready for tomorrow morning. That is yesterday's high, and this is yesterday's close. Now the close is right there. Okay, so I'm ready for tomorrow, and then I have the open, so I'll just leave it here for now, and then I can adjust it for tomorrow. All right, so I'm going to look for bulls to get us up here and try to sell. If they can't sell and we end up going above it and close this gap, we're definitely going to get to the yesterday's high. We might get a breakout there. I doubt it. This is a trading range. Probably we're going to get a little bit of hiccup and come back down. And then if we continue to come down here, buyers are here. Buyers are also here. Okay, so I will have this area. Buyers are also there. Okay, so we could be stuck in a trading range. All right, see you guys tomorrow. L Brooks is tomorrow streaming in the morning, and then I come in after him in the afternoon. I will be in the trade room. Join us. It's brookspriceaction.com. It's $99 a month. It's basically $4.36 a day investment with downloadable webinar files that you can keep. So all month long and all week long, the trade room is open, and you can come in, check it out. You can also sample. We have 2-day trials. You can sign up on brookspriceaction.com website. Okay, bye everyone. See you tomorrow.